Good evening. It's Friday. Excited to have you join us on our business analysis program, Market Avenue. We are live on GBC News on Facebook at Ghana Broadcasting Corporation. Tonight, we take a look at a monthly assessment of the Ghana Stock Exchange because the market indices closed the month of March trading session with an increase in the Ghana Stock Exchange's composite index by 46.40 points. The Ghana Stock Exchange's financial stock index increased by 56 points. The year-to-date return still negative 1.67%, and a total volume of 214 million plus shares exchange hands on the Bourse. The most traded equity for the month, as usual, was MTN Ghana, whose trade accounted for close to 95% of the total shares traded and 92.8% of the total value of shares traded on the Ghana Stock Exchange in the month of March. There were 9 price changes as the market recorded 7 gainers and 2 losers for the month. Societe Generale was the month's biggest loser as the stock price declined by 0.83% to close the month of March at 1 cedi 19 pesos per share. We'll have James Afo join us to have a monthly assessment of the Ghana Stock Exchange. We'll also be having an expert discussion on the State of the Nation address as presented, or the State of the Economy address as presented by the Vice President, Dr. Bawumia in Kaswa yesterday. We'll have Mr. Poknedu. He's an economist. He'll be joining us to give us his expert opinion on that particular lecture delivered by Dr. Bawumia. But before we do all of that, let's go and have our biz language for tonight. Welcome back, Mr. James Afo of CDH. He is in charge of banking investment at CDH. He joins us with an analysis of the stock market. Let's look at how the stock market performed for today. Then we'll look at how the whole market performed for the month of March. And so, as we see, we just saw a slight or a marginal increase in the main composite index and the financial stock index. The financial stock index going up 1.24 points and the main composite index going up 0.67 points. Year to date, by way of return on the investors or the investment that investors have on the market, is negative 3.4%. We see some improvement in the financial stock index. We see the likes of Cowbank doing well in the month of March, moving into the month of April. So we see the financial stock index, improving, but that is not reflecting in the main composite index. And so we see the main composite index at negative 4.3%. Investors on the Ghana Stock Exchange remain worried about the trend we're seeing compared to what we saw same time last year. Let's look at how many shares, exchange hands on the market today. Just a little 79,867 shares exchange hands on the Ghana Stock Exchange. And so we see the market capitalization just moving just slightly to 64.1 billion Ghana cedis compared to yesterday. Let's look at the gainers and the losers for today. Today it was just one gainer. We saw Societe Generale Ghana. They gained a peso. As I yesterday, they were doing 1 cedi 19 pesos per share. Today they're doing 1 cedi 20 pesos per share. And so that's how the market is looking like for today. Let's speak to James Affo, who is on the phone, and understand exactly how the market has performed for the month of March. Good evening to you, James, and welcome to Market Avenue.
Good evening, Boris.
Right. So, in summary, how will you say that the market fared last month?
Well, so we are still in the negative territory, but then most of the indicators actually increased for the month of March.
Sure.
So if you look at the composite index, it increased by 1.72%. Financial stock index also went up by 2.64%. The market cap so increased by 1.825, and the year-to-date return declined from negative 3.3 to negative 1.67. So I would see, the month of March was better than that of February.
We are still in a negative, as you said, and even as of today, we're doing negative 3.43% by way of the year of the returns that investors have on their investments. What exactly is driving down the markets? I mean, when you do a comparison to what we saw last year.
Well, I think Ghana in particular is in a very difficult situation. Most of the economic indicators are favorable. Inflation is moving around 16%. Interest rate on fixed income instruments keep increasing. And so investors' confidence is a bit low, and it is reflecting in what we are witnessing. Whenever interest rate increases, people shift their attention to investment that offers guaranteed return, and it tends to affect the performance of the market. So what we are witnessing is a rapid increase in interest rates in most of the fixed income instruments that we have.
We see a shift towards the bond market. What's attracting investors to move to the bond market instead of coming to the equities market around this time?
Well, the bond market, fixed income instruments are traded, but they offer guaranteed returns. Besides, they've created another market, which is the secondary market, where the instruments are easily traded.
Okay.
If you buy a 10-year bond, you don't necessarily have to hold it so it matures. You can sell it even within a month and buy it for it. Or the market is very liquid. So investors more or less are shifting their attention from the perceived risky instruments like the stock and the asset earnings income into
But the equities market is also liquid, isn't it?
It is liquid, whereby you can easily be sold and can be bought as well. But it has to do with the number of people who are
available to buy.
If you have a lot of people selling against those buying, definitely the indicators are down. And inflation is also high, and it tends to affect the purchasing power or the income level of consumers. Because people normally try to focus solely on goods that have an impact on their life.
Right.
So they'll think of food to eat, payment of school fees, and any extra income that could be set aside for investment may be affected negatively.
Right. So
and
now
they may even be tempted to buy this income instrument.
Right.
Rather than that.
Now that the Bank of Ghana has increased the policy rate to 17%, is it even going to affect the market more? Are investors now going to move more to the bonds market because that's becoming attractive compared to the equities market?
Yes, certainly. That's what we are witnessing. And even for the month of February and March, investment in fixed income instruments increased by 46.96%.
Wow.
Just 1 month. So interest on most of these instruments that offers guaranteed returns are high. But that notwithstanding, I think most of the companies that are listed are also issuing now their financial statements. And I think most of the figures that we've been seeing are positive. And that's the main reason why most of the financial stock prices are appreciating. Some have also declared dividend payments. The investors definitely are also going in for stock.
Right. So initially you said that the economy, the general economy itself, it's in a difficult place. We see just some slight improvement in, in the exchange rate. Is that supposed to be a sign of, some form of recovery and some confidence, especially when we're talking about the equities market, or is early days yet?
Yeah, I think that it's early days. Because if you look at the rate of depreciation for the cedi, the figure from the Bank of Ghana even shows that the cedi has depreciated about 28.48%. That's what I have from their own need. But if you look at the rate of stability that we are experiencing, they are very marginal. So, well, I think the BOG has been cautioning some of these hard currencies, and it has increased the supply of the foreign currencies the past week. That's why we're looking at the stability. We hope to be continuing, but how long can we be doing this? Is this sustainable?
Right. So we'll wrap up on this interview. Managers of the Ghana Stock Exchange have asked government to, as it were, scrap the capital gains tax. That's like 15%. When it comes to the equities market. How exactly is this particular tax, pushing investors away from investing on the equities market?
Most of investment instruments like the proceeds and the like, I don't think there's nothing like tax on the interest and by investors.
Sure.
On the other hand, for the capital market, there's something like that again. So you buy an equity, 1 cedi, you appreciate it 2 cedi, you sell, you get an interest of maybe 100% profit. Then you are taxed again. This serves as disincentive to most investors. And that is the main reason why the patronage of exchange is so low. So in the fact of actually increasing awareness of people, the general public to actually patronize equity instruments. And right investment in equity.
Finally, before you go, we saw Cowbank doing so well in the month of March, and in your report, Societe Generale, I mean, they performed poorly in the month of March. What were the dynamics for these two financial stocks? Finally, before you go briefly.
Well, for Cowbank, well, they're very liquid. It can easily be bought and be sold. So what happened basically was excess of demand over supply. Of course, it appreciates. But for Societe Generale, it's just a marginal change, and it's a temporary shift from average.
Right.
And the stock at all.
Right. Thank you very much. Mr. James Afo is the head of investment banking at CDH. We'll go for a short break. When we come, we'll be speaking to Mr. Paul Kunedu. He's an economist. He will give us his expert opinion on that message delivered by Dr. Baumia yesterday in Kasua. A short break, we are back. Watching Market Avenue. We are live on Facebook. We are live on GBC News. And so yesterday, the Vice President, Dr. Baumia, delivered the state of the Ghanaian economy. He insists that his government has managed the economy better than the previous administration. He took us through the trajectory from 2016 up to now. And he says that COVID-19, the Russia-Ukraine war, and the banking sector cleanup and the excess capacity charges we pay in the energy sector are some of the major reasons why we are where we are today. I will speak to Mr. Paul Kunedu. He's an economist. Let's understand exactly what he makes of that particular address delivered by the Vice President. Good evening to you, Paul. Paul, can you hear me, Paul? Right. So Can you give us your personal, or maybe, from an economics perspective, what you make of that particular message delivered by the Vice President yesterday?
And to tell them an informed information or give them an idea as to what is causing the crisis. And in that regard, I think the Vice President did a good job by responding to the call to address the nation on why we are at where we are now and why we are facing the current challenges. And I think it is important that he accepted the fact that we are in crisis or we are facing some challenges. And then he took a step further to give us the diagnosis as to why we are facing the challenges, talking about the increase in the debt levels, talking about the constant depreciation of the cedi, talking about inflation, oil price, and all the other challenges that we have. I think he did a very good job trying to justify why we have experienced certain price increases across markets in Ghana. For instance, he made us understand that the cost of shipping has increased by about 578% within the last year, and that has directly built into the cost of goods and services. He spoke about the Russia-Ukraine crisis. He talked about it leading to increase in fuel because Russia is a major exporter of oil, and it also having an impact on the price of grain and other commodities. Now, aside telling us why we are facing the challenges, I think when it comes to the solutions or what government is doing to be able to address the challenges, that is where some of the solutions that he gave probably are not convincing enough. Talking about the high and rising debt levels, I mean, we cannot blame everything on COVID-19, on the energy sector excess capacity charges, and also on the banking sector cleanup. You and I know that if you look at the COVID period, for instance, some of the expenses that we made probably could have been avoided. We talk about the free water that we provided. You know, when you are in a critical situation like that, you want to make sure that interventions are inclusive, are targeting the vulnerable in society. So, for instance, the free electricity for lifeline consumers was a commendable intervention. But free water for average people and high-income groups, because if you look at areas that are connected to Ghana Water, most of these areas are high-income areas. So if you end up spending so much for these people, whilst majority of the vulnerable people are not enjoying, assuming we borrowed to finance such an expenditure, I wouldn't see that to be justifiable. So some of the problems we have now, I think we self-inflicted it on ourselves. And then also talking about the issue of oil price, I think government can do more to be able to push in Ghanaians. The Vice President spoke about the preferential sales of foreign exchange to the bulk oil distributors, but I think we can do more because oil prices are having a pass-through effect on almost the price of all goods and services. And if you look at the oil price build-up, there are three key factors. We have the import parity price of oil, we have the foreign exchange, we have taxes and margins. The Vice President spoke to the issue of foreign exchange, trying to sell foreign exchange to the bulk oil distributors at preferential rates so that the pass-through effect on the final price will be minimized. But I think one area he didn't look at is the taxes. We have about 8 different taxes on oil and then 5 different margins. And some of these taxes, I think, could be scrapped or even reviewed to stabilize oil prices to reduce the pass-through effect on inflation and the general cost of living.
Right. So will you agree with the Vice President that what we're going through currently, the economic turmoil we're going through, is largely as a result of COVID-19? You are in Italy. is the situation the same? Has COVID-19 brought, the Italian economy, for instance, to its knees?
Yeah, in Italy, I think there was a different approach towards the support that was given to the economy to revive the economy from the ruins of COVID-19. Here, the government supported businesses, SMEs that were suffering and making losses, were given the opportunity to access special funds from the Italian Development Bank. And to be able to access that fund, you have to prove beyond doubt that indeed you were making losses because of COVID-19. And those loans were backed by government security, or there was that kind of security to guarantee those loans. So even though the commercial banks were giving out those loans, if the SMEs were not able to pay, government steps in to pay.
Sure.
And because of that, most of the SMEs have been able to revive their businesses, and now employment opportunities are available as the Italian economy is recovering from COVID-19.
Right.
Now there are opportunities everywhere because companies have been able to revive and production is booming. I think we didn't do that. We spent on a lot of social interventions which could have been avoided. The free water, for instance, if that money probably would have been strategically used to support SMEs, we would have been able to build a base of the economy to produce more and generate more employment.
But really, if you look at the figures, if you look at our GDP growth from 2017 to 2019, you just will agree that we were just on a path of growth, and then COVID came to interrupt everything. Is that not right to say?
Yeah, that is true. I think if you look at 2017 to 2020, we're growing on average about 5%, which was quite okay. Around the COVID period, we did a little above 0%. I think we could have done better. And if we invested in the right areas, probably would have recovered much better than we are doing now. If some of the investments that we made in social interventions were rather avoided and such money channeled more to specific SMEs, to target SMEs that needed support to be able to recover from COVID-19, to the agriculture sector, for instance, to make sure we develop our agriculture value chain and make sure that there is ready markets right after production, would have probably been able to recover better from COVID-19 and created more employment opportunities for the youth who are now having to deal with a high rate of unemployment.
Right. So Paul, we'll be wrapping up on this interview. When it comes to the exchange rate, I mean, he took his time to take us through all the economic indicators, but I just wanted to talk about the exchange rate, and he blamed it. He compared the rate of depreciation of the cedi to what transpired in the previous administration. I'm just asking, in this time of crisis, I mean, the man who imports does not really care what used to be in the past. What he is interested in is how the cedi has depreciated. I mean, if I was doing 4 cedi 20 pesos in 2016, now I'm doing 7 cedis or 8 cedis. That's the concern. So is there a justification for the depreciation of the cedi around this particular time?
I think to be able to address the issue of depreciation of the cedi in the medium to long term, we have to look at the structure, the underlying causes. Right. In fact, if you look at 2007, when we did the redenomination, it was 1-to-1. To 2020, the cedi depreciated by 500%. And that is because we are a net import economy. We import virtually everything. Right. And over the years, we haven't made the attempt to be able to develop local substitutes. If you look at oil, for instance, even though we are supposed to be a net exporter, because we export the raw crude, we earn $3.5 billion on average per year. We end up getting just about 500,000 because our participating interest is just about 16%. Sure. And because we are not refining, then we end up spending $2.5 billion to import refined petroleum products. And that puts pressure on the cedi to depreciate because we always end up supplying more of the cedi on the exchange rate market for a unit of the dollar to be able to import from outside. I think to be able to tackle that issue, we need to revive the oil refinery, for instance, to make sure that we are refining the oil in Ghana. If we are refining the oil in Ghana, then we'll be able to absorb it to make sure that the pass-through effects for global international development do not affect the domestic price of oil in terms of the exchange rate,
right,
and also in terms of global oil market
right.
price.
Thank you very much, Paul. Paul Apiakunedu is an economist based in Italy. This is all time will allow us. My name is Morris Ogbete. It's Friday. Enjoy your weekend. I'll see you on Monday for another edition of Market Avenue. Good evening and bye.